Hey, Dustin.
Hello, Hamid. We're here again.
We're here again, episode 9, and this time we have no idea what we're doing. So let's put that out there right off the bat. But we figured, why
With
not?
investing or with this podcast?
Any of it. We have no idea what we're doing with investing. You should not be taking our advice.
That's for
So
sure.
that's for sure. We have no idea what we're doing with this podcast. But then we said, what better way to have no idea what you're doing than to invite people who actually do know what they're doing and as guests. So we have a special guest, Shay Boloor. I still
Hey
messed it up,
everyone.
didn't
Hi.
It's all good.
So Shay, say your last name for us so that it's
Boloor.
Yeah.
Boloor.
What's up,
Shay
everyone? My
Boloor.
name's Shay Boloor, but you can call me by my Batman name, StockSavvyShay, whatever's easiest.
And the word savvy is in his Twitter account name, which coincidentally he happens to be a savvy trader portfolio guy who shares his portfolios on Savvy Trader. So that just was serendipitous, huh? It just
Yeah.
worked out where you had savvy in your name, and then you're like, whoa, look at this product that you happened to discover.
Yeah. You guys would be surprised how many people think I own the company. So thank
I
you for
wouldn't be
that.
surprised. We get a lot of user feedback of people talking to you when they're really talking to me.
Dustin is basically your support team.
Well, I appreciate everything you do, Dustin.
Yeah, I expect a check in the mail next week.
Yeah, I was like, not all heroes wear capes, and you're one of those examples.
That's awesome. So we have a lot to talk about, and Dustin's going to keep us on topic. But there's this sort of big event that's happening right now with potential government shutdown, and I don't think that's resolved yet, right? Like that might actually happen as early
It
as
did
when.
happen.
Oh, are we shut down officially right
I
now?
thought we were. Are we
Last
not?
night. Yeah,
Oh,
officially. I
last
think
night.
we're
See, like that's how behind I am. I'm not even paying attention. That's how much attention I pay to macro events, essentially. So I always talk about how I don't pay attention to macro events, and there you go. I don't even know that the government is shut down. So, Shy, as somebody who actually pays attention to all the details of what's happening, what are your thoughts on the government shutdown, and how should investors be going about doing what they're doing, and what do you do specifically?
Yeah, so I do want to caution what I'm about to say is in the lens of an investor, not as Shay Boloor, Angelino, who's just in regular society. This is purely business. My business take on it. It does not matter. It is purely political theater. We've seen this movie plenty of times, and I think that you can't get distracted from the real story. And what is that real story? The earnings machine that AI is causing right now is going to still be humming. The liquidity that the rate cut cycle has begun is still going to be continuing. And as soon as you see any kind of fear driven sell off on the government shutdown about to happen, I think I'd get signs of scoop that up. I wish we got more pain. Apparently, today, a lot of people had that same ethos or mentality that I had, where like, oh, we were red. I'll buy the scoop up because this should not change the story of why we're rallying right now. Because in my view, every shutdown driven dip has rarely lasted. This might last a couple of days, might last a week. I doubt it'll last 2 weeks. But right now, the whole story of why the market's gone berserk and it's gone to a level of let's ignore any seasonal weakness that we should be seeing. Let's ignore any jobs data that should cause maybe some recessionary fears because the demand curve for GPUs, the grid capacity, electrification, and the large scale AI isn't being dictated on these political negotiations. So I think it's just pure theater, and that's what we saw today. So I think you should look past it. Is my take.
So the market seems to be looking past it for the most part anyway. Like on Monday and Tuesday, we pretty much had an up day, if I'm not mistaken. So does that worry you that like we have been putting a lot of eggs, or the market has been putting a lot of eggs into this AI basket, that like AI is going to solve everything, and the macro economy is going to grow in a rapid pace, that like we don't need to worry about the jobs numbers or other things that might be giving some indication, some of the things that you mentioned that might be giving some indication that there should be some caution going on?
Yeah, I mean, my biggest fear right now is clearly empty AI cities. What I mean by that, I think we're in a big time. Everyone's trying to get as much hardware, compute, servers, accelerators as possible in order to fulfill all the potential demand that's going to be coming in this new AI economy. There is risk in overdeveloping, clearly, if there isn't going to be anyone living in those cities. I live in LA. I'm an Angelino. There's some parts of DTLA that they just quit halfway through building these high skyscrapers because interest rates stayed high for longer than expected, and nobody really commercial real estate got destroyed a bit, especially residential ones. So there is some worry of that, but I don't see it. Like I don't think I know there's I've gone on TV multiple times past week, and biggest topic is AI in a bubble, mainly because we've just gone berserk again for a couple of years, and not just that. Ever since the April tariff war, I think Nasdaq's been up 55% in a matter of 6 months. That's unnatural. But what's also unnatural is the super cycle we're in right now, where there hasn't been a time. Again, I'm only 32 years old, so like I am not the most experienced, but I did a lot of reading. Like I just don't think there's been a super cycle like this where one tech revolution is going to touch every aspect of the world, white and blue collar, every industry out there. So the opportunity is huge. So a lot of these hyperscalers, the current leaders of the AI build out, I'm talking Microsoft, I'm talking Nvidia, Google, Amazon, Meta. These aren't speculative startups that are burning venture capital like it was in the .com era. These are companies who are just allocating 60 or 70% of their cumulative free cash flow into buying these hardware. So it's like not just borrowed money where it's trying to monetize eyeballs. That's what .com era was. There was no revenue being valued for eyeballs. This is clearly being backed up that if we get these tools in place, we're going to have inference, we're going to have tokenization, we're going to have workloads that we can monetize once we're not constrained any longer. So that's why I do think the AI bubble is a bit overstated. I do think there's pockets of bubbles out there. I just don't think that all these hyperscalers, these ones who really drive the indices, like they aren't in a bubble. If you ask me, like I think it's actually pretty fairly valued. And every 3 months you're reminded, wow, the AI pie is bigger and they're expanding their margins even bigger than we anticipated. And their stock price might be up 15% since then, but their multiple isn't actually that extended.
There's actually two things. Like one, I feel like Jensen has pretty much said those exact same things, which is that the AI spend cycle is just beginning, and there's no sort of like sight of like ending, because AI is actually making these companies more profitable, and we've already seen that with like Microsoft, with Google, with Meta, where AI is serving better ads in case of Google and Meta, and they're actually adding revenue to their products from Microsoft and Google again as well. So it's generating real revenue, and the fastest growing software company in the world ever is OpenAI, which is all around the AI products that they're offering. So this is a very different thing than the .com bubble. And I agree, for people who lived through the .com bubble, myself included, anytime they hear the word bubble, they're like, that's the comparison that they're often making it to, right? Is this similar to the .com bubble? And I always say, like, no, this is not at all like the .com bubble. And one of the things that I think you touched on, which is super important to point out, the .com bubble was built on VC money that was greed-based, that was being thrown at companies that had no way of sort of making revenue, and they were all losing money. Whereas this particular AI bubble is being funded by highly profitable companies using their cash flows. So that is a huge distinction. Maybe XAI excluded from that particular statement, but everybody else is using their own cash flows. Elon has a way to just access other people's money for what he wants to accomplish. But yeah, Dustin, does that trigger any sort of commentary or questions for you?
I mean, my gut reaction always when the market's moving up quickly is not that it's necessarily a bubble, but just to be cautious and hesitant. I do think it's very likely that it's very much the beginning of this story and not the end.
Mm-hmm.
With that said, I'm not invested in Nvidia or anything, but I do have exposure via Google and Meta and things like that. I guess
yeah. Go ahead, Dustin. Sorry.
Well, I was going to pivot. So, what were
Well,
you gonna say?
I was going to say eventually I want to like talk about some of the specific names in your Shy, in your portfolios that you've been betting on with this sort of perspective, which I think our viewers and listeners are going to be super interested to learn about. Because I'm constantly being asked about like new names or names that are in your portfolio and what's my opinion of them, and we can talk a little bit about that. But before we do that, I thought it might be kind of interesting for us to share a little bit about our portfolios and then kind of get your perspective on our portfolios first.
Fun.
And then, yeah. But Dustin, if you want to pivot to what you want to do first, do that.
We were along the same lines of pivoting towards asking Shy more questions. But why don't you talk about your portfolio? I know you made a sale earlier this week.
Oh yeah. Okay. So here I'll jump into my portfolio. So Shay, I don't know if you've ever seen my portfolio yet, but this is my portfolio, my largest holding, thanks to you. And by the way, I discovered Rocket Lab because of you. I knew about the company, didn't know about the stock, and in one of the spaces, I think you mentioned Rocket Lab and how you were super excited about it. I looked into this company and immediately jumped on board. I think at the time the stock price was in the fives, like maybe 550.
Nice.
Yeah,
that's a 10 bagger.
Yeah. And I started buying it. Actually, fortunately, whenever I start buying stocks, they go down. So Rocket Lab was no exception. So Rocket Lab went all the way down to the threes, and I just kept buying more as it went down, and then it became, as it recovered and just skyrocketed, it has become my largest holding. Prior to that, the stock that was the largest holding was Robinhood, which had a similar sort of thing. I started buying it in the 15s, went all the way down to the 7s, and I just kept buying more. And Robinhood has just totally killed it over the past couple of years, as you know. But I have been trimming Robinhood, and I've also been trimming Rocket Lab, not as quickly. I feel like Rocket Lab's future is like much more easily justifiable in terms of how quickly it can grow to fit its current valuation. Whereas Robinhood, for me, is also like it's just a more extended timeline in terms of when it might be able to grow to fit its valuation. Then I also have Rivian, Meta, Bumble, Google, and I still have a little bit of AEO, which is American Eagle Outfitters. I bought that after the Sydney Swing.
Wow, so you have like 5 or 6 positions, or 8 positions only, elite 8s.
That's right. That's right. And then Bitcoin is my tiny little sort of like backup plan in case all hell breaks loose type of thing. Not from an investment standpoint. I'm not a big crypto guy, unlike Dustin, whose portfolio you'll see soon. But yeah. And then I have a large cash position. So with that like overview, what are your thoughts about my portfolio and any specific holdings? I'd love to hear your thoughts.
Well, Robinhood is the one that got away from me. I think I'm a thematic investor. So you guys, when we go later on in my portfolio, you guys are going to see what I mean by that. But fintech was one theme I just could not wrap my head around on why it's exciting. I always thought it was just a UI wrapper around a commodity of a business. I underestimated how the leverage that UI can cause into different product modules. And that's what Robinhood, like they monetize eyeballs. They don't really monetize volatility. That's what brokerages really capitalize on, is monetizing volatility. And as soon as Robinhood made that big pivot on getting retirement funds underneath their ecosystem, they started having these product launches every single month. I was like, this is looking more like a marketing engine almost, in a way. It's not that much of a brokerage. And I was like, okay, I'm seeing signs of a potential narrative change, a re-rating based on a narrative, because that's where you get those 10xers. The market thinks this company is like this, but really it's going to turn to this. And that's how you get like, oh, it goes from $5 to $50 like Robinhood. Like Rocket Lab. Rocket Lab was a scrappy number 2. Now it's becoming a space logistics company in the future because they've expanded their product suite like at a similar pace that Robinhood did. And now you're seeing the most recent Robinhood example is predictive markets. Look what's DraftKings been doing past couple weeks. They've gone destroyed. Why is that? It's because there's more people at the table now. They were the first mover of a degenerate economy. My big case in DraftKings was always like, okay, well, what's their demographic? Degenerates. What do degenerates care about? Best bang for their buck. There's no brand loyalty with degenerates. They're just going to go for the cheapest or most amount of dollars they can get. And I was like, all right, the bigger players, you're clearly seeing Amazon, Netflix, Apple, they get into live sporting right now. The next synergy for that is some kind of sports betting infused in there. They have the pockets that are going to outspend DraftKings. Now, Robinhood, they have so many eyeballs in their ecosystem. They launched predictive markets like a flip of a switch overnight, and all of a sudden, they have $4 billion in spending. I think it was just this week they announced that. That felt like
I think they take a 2% commission, right? Like that's $80 million to their bottom line or something like that. It's kind of crazy.
It's insane. But like, how long did DraftKings become DraftKings? Probably years and years and years. And Robinhood just did it within probably longer, but like it was within a quarter, maybe 2 quarters. I just think that now you're seeing signs of Robinhood becoming not a brokerage, not an interactive brokerage accounts or Schwab, etc. It's something. They're creating a new breadth of a category that doesn't exist yet. And I think that's why you're seeing them being worth 130 bills. So for you to trim, I get it for sure, because it's a 10 extra for me. My strategy has not panned out as much as I'd like, but it's a good thing. Like if a stock becomes a multi-bagger, I always take the immediate risk out, and then it's just now profits. So Palantir, I got in Palantir at $8. I started trimming in 30-40, but I really sold all my risk at $60. Clearly way too early. It's tripled since then. But now I just don't care. It's all profits. So I don't take the risk away. So
it's still your largest investment. I've done the same, like with both Robinhood and Rocket Lab. I've taken out more than double what I put into it, and it's still the largest portions of my portfolio. Yeah.
But I will say the Rocket Lab, it's one name I have been adding. I do think Rocket Lab.
I noticed that actually.
So they 10x'd clearly, but it was kind of deserving of a 10x. Like it's different than Robinhood. Like it was
stupid valuation at $3 billion and sub $3 billion valuation. It was like insane. Because at one time it was like a $2 billion valuation for a rocket company that's putting satellites into orbit and building satellites, by the way. And like Jeff Bezos has spent over $10 billion and hasn't been able to do that yet. So, the fact that Rocket Lab is the number 2 company doing that made them worth at least more than Blue Origin, right? Like it should have been worth more than Blue Origin.
Well, it's because everyone was viewing Rocket Lab in the Elon Musk goggles. Like there's like SpaceX is going to destroy them. $2 trillion economy in 15 years. You think it's going to go all to one company? No, this is a $2 billion company. Even if they get 1% of that mark, just 1% of that 2 trillion, this is going to be a multi-bagger. And I think now we're seeing signs of it's not just going to be 1%, it's going to be a lot higher. And I think that they have just morphed into a space logistics company with so many different offerings. That's more service revenue, not just launches. I think they're clearly de-risking themselves from being a launching company, which is, again, it's like cybersecurity. If something wrong goes, your stocks can go lower because there might be, you just never know. It's space. It's too early, but they are just like the second biggest player in this industry that's just getting started. It makes me feel like that they have a founder-led CEO. He bleeds Rocket Lab, and they've done everything right this early, and they're just in such a cash position to acquire assets at a fire sale because they can't figure it out, and they've done that. I just think that I want exposure in space. I'm hyper bullish on that. That's an inevitability, not an if. And Rocket Lab still being I think they're $25 billion. I don't know. I just see, I want to make sure this is a top 5 position for me. So I've been adding to that name. But also, I think that there's going to be a lot more government sovereignty spent towards them because of that middle school fight between Elon and Trump. I think that's sure nothing came out of it, but I think they were probably surprised of how quickly Elon was willing to use SpaceX as a pawn in that fight. and now they same
And the
reason
other
why.
way. Both
And the other way,
both
yeah,
of them were willing to use it as a pawn. You know, it's like, oh, maybe we should deport you,
totally.
or
I mean,
like it was just kind of crazy.
but it's a national security issue. Like if
Yeah,
let's just say
I 100% agree.
SpaceX got removed, so now like as a national security, you need to deleverage yourself from the go-to, just like TSMC. America's
Right.
deleveraging themselves from Taiwan with Intel. I think they're going to see a lot more flow going toward Rocket Lab because they need to deleverage from SpaceX. So I think that's a massive tailwind that's not really discussed as much as you would think.
And Rocket Lab is sort of slowly and quietly adding all of the technologies that's necessary, like the laser communication technology. They just bought a company to do that for them to be building these communication satellites in similar fashion to what Starlink has, for example. So they're in a great position to be able to capitalize on that sort of future as well. I don't know if you agree with that. Yeah.
No. Yeah, I think I speak in some CEOs in that space, like you'd be surprised of like how buddies they are with each other, because I think it's such an infantry of an industry that they just like know there's not them. They need to help each other out to get to point A to point B. It doesn't matter the competition as much. So I think that they do help each other out of what the bottlenecks are in the space economy. And it's like not as like, oh, you're stepping on my turf, etc. So I think for Rock Lab, like you'd be surprised at how many logos they have on, like you'd think competitors, but it's really they're just partners. Yeah, exactly. Yeah. So I think it's if you're a first mover and you're that big and you have the biggest cash position in public markets, you're just gonna keep expanding your modules essentially of how many offerings you can have.
Okay, I want to hit on Dustin's portfolio as well, but before we move over to Dustin's portfolio, is there any other name in my portfolio? So, between Meta, I don't know if you've looked into Bumble. I doubt it. It's not in your sort of normal wheelhouse, but Rivian, Google. Do you have any sort of commentary on any of those?
So I think consumer-related stocks are very tricky in this new world we're about to enter. I think eyeballs are going to be a little guardrailed or wall garden with the bigger players. And I think that's what I mean by that is I think consumers are going to be totally different, like a 180 in 5 to 7 years. Like I don't think if a consumer app is doing really well right now, I just don't know. Like I think the tools out there are going to
necessarily.
Exactly. I think there's going to be a lot. It's easier to create an app these days now with all these AI tools that we have. So like for dating, for example, Bumble, like I think that there isn't a loyalty if you have a broken heart. I think if you're on Bumble, you have a broken heart.
That's very romantic. But you do need a network effect with these dating apps, right? That's the problem there.
Can they compete with LinkedIn? Because the network effect would be something business-like, in my opinion. But it's also weird to when back in my single days, like I just think that morphing my business world with my dating world, like that's just like that does not belong together. Stay as far away from each other as possible. It's like to monetize the network effect for Bumble, I'm asking myself like, what can they do? Because
but I think the network effect that Dustin is referring to here is that like you can't just jump into that without having a massive user base and do well, right? Like you kind of need the masses to already be using
it. Yeah, in regards to like you're right, it's very easy to make an app. Hey, we did it, right? But but
we made an amazing app, first of all.
With this industry, you need to have the network effect for it to succeed. So I think that's more the mode.
So let me ask you this: like, why doesn't Instagram just focus on that?
I said that last episode. Thanks for listening.
Oh, you did? Oh, I didn't. Perfect. So like that's what I'm saying. Like the bigger players who have this like impenetrable network effect, like nobody's going off the gram, Facebook, maybe them. Like that's where I'm like, oof. Like all they'd have to do is pull Robinhood, and all of a sudden it's like DraftKings all over again elsewhere.
Right.
It's tricky.
Okay, so I don't disagree with that, but Shay, like the reason that Bumble in particular, and I'd rather talk about Meta than Bumble, but I'll just quickly touch on Bumble real quick. But the reason Bumble in particular is interesting to me is because of its valuation. It's valued at roughly 600 million when it has $1 billion in revenue. So 0.6 times revenues, and then compared to like Palantir, which is like what 150 times revenues or something.
Yeah.
And then it has roughly a $240 million run rate of cash flow, which is roughly a third of its market cap in cash flow. And Mark Zuckerberg doesn't care about the dating industry because the whole thing is maybe worth a few $1 billion. It's single-digit billions, whereas what he's going after is AGI, which is worth trillions of dollars. It's funny because now we're talking about like trillion-dollar businesses being the more attractive thing that these companies are going after. So these billion-dollar businesses are no longer interesting to the most to the companies that have the biggest sort of like massive users, if you will, that could put these billion-dollar companies out of business, but that's just not their focus, right?
No, it's also tricky because like monetizing it, obviously it's ads. So if you're like swiping, for example, are you gonna be annoyed by the ads? Pay up for the premium. So now you have to like make sure the pool is new enough, it gets refreshed enough with new candidates, that makes it worth paying the premium. It's tricky. It might be, you're right. This is, again, this point of a 10 bagger or 5 bagger, market sees this, it feels obvious until something changes. And now there's a re-rating that occurs. But I just like right now, I just thought of an idea for like, I don't know if you guys talk about Duolingo ever, for example, but Duolingo, I think it's vulnerable to Gen AI. I think it's highly vulnerable.
Yeah.
But
and I think the stock got crushed because of AI as well when Google announced their sort of auto translate capabilities or whatever. Yeah. Continue.
Exactly. And it's not based on fundamentals, because fundamentals look chef's kiss. Like it looks incredible. I'm in the minority that thinks that it's going to look totally different. But if they actually go for the human education routes, which is what the TAM, every bull says, why not creating some kind of dating feature where you can actually align people who are same interests along that Duolingo ecosystem? Like, oh, you love French, you love learning this music, you like this, etc. Like you have the data. The data is the fuel for the new AI world where like you can actually tailor make what the advertising you need to see, what your future partner should be. So like maybe Bumble has that data advantage. This is like me trying to figure out what would the re-rating be. They have a first mover advantage, especially with women, because that whole thing was women have to be the aggressor. Aggressor sounds off, but it just has to be the first mover.
The first move. Yeah.
Yeah. So like maybe there's mountains of data that they can figure out how to leverage on this new AI world. But like, I don't know how, maybe it's something autonomy, robots. Like, I don't know. Like maybe there's a world. I don't know. I just thought of that right now. I don't think it's I can't even imagine what that would be like, but data is an advantage. It's a moat. So like they have one. I think you have to be very quick for them to actually make that pivot. Like they have to do it pretty quickly, or they'll just go with the PE route, or so Match Group will just, I don't know, Match Group won't, because that's the founder. I think something happened there, but
yeah.
Something.
Well, I mean, it would make sense for them to try to acquire it, but yeah. Okay, so let's move on to Dustin's portfolio. Dustin, you want to go over your portfolio real quick?
So let's just spend like 5 minutes, if that, on this, because I really want to get to talk to more about Shay. So
wow,
my
crypto,
portfolio,
look at 50% crypto.
All right. Really like
Dustin
70% if you add it up. But who's counting?
Dustin is the crypto guy. I'm more like the traditional sort of invest in value companies.
Yeah, it's funny because
undervalued.
Hamid and I actually share a lot of the same positions. It's just very different distributions. And there's a handful of things he owns that I don't, like Bumble, and a handful of things that I own that he doesn't. Like I own a few more Mag 7 stocks, for example. One thing I wanted to hit on that I've been thinking about a lot recently is the P word, which of course means perspective. With you like that?
Not profit.
With Bitcoin and Ethereum, they've been.
Of course, a crypto guy would say P word is perspective as opposed to profits.
Yeah. And by the way, what I'm about to say is very applicable to just all stocks, but it's specifically, I've been thinking a lot about perspective when it comes to Bitcoin and Ethereum. So it's kind of been ranging between like 130 and 100, you could say, for the last few months. And it had a high. Bitcoin had a high of $124,000, I think. And has gone down since then. It hasn't gone back up. And a lot of people have been fearful of like, is this the top or whatnot, and being very freaked out. Where perspective comes in is not so long ago was 109 the all-time high for Bitcoin. And just this weekend, Bitcoin went back down to 109. And like, people are freaking out where before people were hoping in like this range over here where 109 was the high, and then like it just kept dropping. People were hoping, oh my God, I want it to go back to 109. And now it goes back to 109 after it went past it. People are freaking out. And there's just this element of like, you have to remember how quickly these markets move and just kind of chill and not worry too much, as long as like the larger narrative still makes sense. There's really nothing to worry about when it comes to price action. Same thing with Ethereum, where Ethereum took forever to break out of the 4K range for a while, and then finally broke it, went up to 4,900, I believe. And then this weekend went back down to 4K when like that was not necessarily a price target, but like a milestone that, I think at least I've been thinking about, and a lot of people should be thinking about.
You're not wrong. I mean, first off, whenever Robinhood hit $100, everyone was like, I can't believe it hit $100. Now it's at 140. People are like, I can't wait until it gets $100 so I can add on that dip. Like
Right.
that's the narrative follows price action all the time. But for crypto, for example, like I think I'm a TradFi guys. Like TradFi, I participate a little in Ethereum recently, but just because like I have nothing else to do because my high conviction names are just running and I'm not adding anywhere close to those area. Is they were so strong this year. Like they did not feel Bitcoin specifically did not feel that election gap at 70K. They were just not even close. That tells me that it's basing before the next leg up. Like this is just essentially digesting the massive move it had, and I think that's really natural. I also think that
I think it's healthy.
It's very healthy. I think Bitcoin is kind of at the tax of Ethereum's spotlight right now. I think there's only so much crypto pie appetites, and I think that if Ethereum's clearly with Tom Lee, what he's doing is just taking a lot of the crypto spotlight, and I think there's a lot of upcoming legislation for Ethereum specifically as well. And a lot of people, if you think about Ethereum versus gold, Bitcoin, one's gold, the other is it kind of is a little like one's finite, the other is an application that is backing stablecoin, and stablecoin is becoming the hot topic right now. And you're seeing these publicly traded companies who are going an IPO, Circle, I'm blanking on a couple others, but they're stablecoin players. And I think that you're seeing, Tether, exactly. Those like they're just getting a lot of like stable coins getting a lot of attention, which means Ethereum should be getting a lot of attention because it's on Ethereum. And I think that that's where it's been hibernating a bit before Bitcoin was breaking out. And I think right now, Bitcoin is perfectly fine. It's maybe becoming a little more boring as well because people want Ethereum, not just Ethereum, they want the treasury plays on top of Ethereum. Like Ethereum itself isn't alpha enough. They want that treasury angle. So I think now there's just one of those things where it's so many people now, or so many companies, so many different avenues to invest in crypto are now hitting the public markets that the OG or the actual substance, which is Bitcoin, is just kind of getting looked past a bit. However, I am the most bullish on Bitcoin out of all of them. I just think that a lot of the others are more capitalizing on the moments, where Bitcoin is really capitalizing on a movement. There's a big difference on those two type of perspectives, like you mentioned.
I agree. And it took me a couple of years to fully understand that. I used to be more bullish on Ethereum and then slowly realized it's easier to disrupt Ethereum because a better technology could come in its place, like Solana, for example, where it's harder to disrupt Bitcoin because that is the movement.
Well, I think Ethereum was always looking for a problem to solve. That was the issue in my research. Like there just wasn't anything for it to really solve after the first thing it solved. Now it's just stablecoin is giving it a renaissance a bit. Now Tom Lee is inviting the TradFi sheeps to come look at Ethereum through Bitmine. And now that's creating a whole new audience, whole new people, investors like myself. I'm a TradFi guy, but I own some Bitmine because I see the 6-month opportunity where legislation, the technicals, etc. If you asked me 6 months ago, I'd be like, you're delusional. I like fundamentals. I need revenue. I need blah, blah, blah. But now, like we just talked about, Palantir's 100 times sales, Robinhood's at 140. Like all these names are just, these proven winners are just running.
Robinhood is 140 PE, not sales. A little different.
No, sorry. I was talking 140 stock price.
Oh, well, 140 per share. Okay, yeah.
Yeah, per share. I'm just saying, like, a lot of these
actually, even their PE, I don't think is that high. But
I think
yeah.
PE is like 80 times. I think last time I checked or
that's
something.
right.
But no, I think that
but no,
right now,
just the commentary I was basically interjecting with so rudely is that Palantir is sort of in the stratosphere all by itself. Like
Totally.
no other company is in that level of overvaluation. As at least Robinhood has a lot of good company or whatever. But I'm sorry, continue.
No. I mean, we can get to Palantir. I think that's a good transition to get to Palantir, unless there's looking. Oh, my other question for you, Dustin, is what is the point of owning a $2 trillion company at less than 1% of your portfolio?
Oh,
yeah, that's a great question. Thank you for that. Actually,
it is a very good question, and there probably isn't a point. I probably need to rebalance, but what I'm waiting for, if I'm doing everything right, and I probably won't, so we'll see, is I'm kind of hyper focused on crypto, letting that bull cycle play out. Hopefully I'll take profit there, and then I'll rebalance the rest of my portfolio after that. But I really look at my portfolio as two, even though it's one. I look at crypto and I look at the stock. So the numbers make more sense when you look at it just like at the stocks.
Gotcha.
Then it's like 20% of my portfolio, and then the percentages are much larger. But like
that makes sense.
But you're correct. Like right now, this doesn't make sense, and it should be updated. But I'm just being patient and waiting to make those optimizations.
So many people don't think about that question that you just asked, which is so important, Shay. And maybe you can explain why you asked that pointed question. Why would you own 1% of your portfolio in a $2 trillion company? And what's the reason you asked that question?
Yeah, so it's actually a great. So the reason, you guys, I have two public portfolios on Savvy Trader, but like I like to categorize each one in buckets. So the way I do is bonsai, core, moonshots. So I call myself the Judd Apatow of investing all the time because I fall in love with my positions, like the stories. Like I have a little more romantic than I would like to assume. It's very too emotional. I've been working on that because I've missed some great opportunities by not cutting my losers, and that is very important. So for the moonshots, I like to have a handful of positions that I love the story. I love that they're an early disruptor with some kind of moat or tech advantage in the IP that's tackling a dinosaur industry or a brand new industry. I don't see any of it in the fundamentals. So I want to track it, but I want exposure that if I am right, this is a 10Xer, this 2% position will do wonders for my portfolio alpha in the long run. I'm talking Rocket Lab. I was bullish on Rocket Lab. It was a 3% position. I was talking on Spaces nonstop about Rocket Lab. I loved Rocket Lab. Loved it.
That's literally how I found out about it.
Yeah, I'm capping my risk though because I could be wrong. Like this could just be a satellite number 2 player that has an error on multiple launches, and it doesn't really turn into a space logistics company. Like I could be very wrong, and at the end of the day, I'll lose 2 or 3% of my portfolio rather than going overweight at 10%. And all of a sudden, I take the 10% hit. So I think that a lot of times these moonshots, like you have the 1 to 3% positions on those moonshots that if they work out, beautiful, it's gravy. If they don't, you don't lose sleep overnight. So Amazon, for example, I think Amazon for me, it's the second biggest position in my growth portfolio. I like to have some anchor stocks because I am so risk on that I also, my chest, it should not be this hairy, but it is because of 2021. I experienced brutal pullback, and I did not sleep well. It was my first time really experiencing a bubble bursting. And I know that you never know when a black swan event can occur. Like you've had one each year, the past 2 years, yen carry trade crisis, Terraforce, both VIX hit a 50 plus. That's COVID level. So now I like to make sure I have some kind of stock that doesn't go down 60%, 70%, probably goes down 25 to 30%. And that's like an Amazon. It could be a Meta. It could be any of these multi-trillion dollar companies who are trading at fair valuations that if there is some risk off events, I won't blow up my accounts. So
but
I call
1%
those
of your portfolio in one of those wouldn't also do much for you if they go up, because they're not going to 10x.
Exactly.
They're only going to go up maybe 15% a year, or 20% or 30% in a good year, or something like that.
Yeah, you got to, for me, you just got to shoot for the stars or shoot for the 3-pointers for the lower ones. Like right now, my IonQ was another one that I just like, it was a small position. It grew. Another one is
actually
Chumi.
Maybe we can jump into your portfolio. Do you want to do that, Dustin, or should I pull up his portfolio? Or
I don't want to show the portfolio because I think that.
Actually, do you mind if we show your portfolio, Shay? Because I think it's going to be
it could be a low benefit for everyone.
Okay.
Well, yeah.
Yeah. Well, we'll show you guys. Oh, here it's the unveil. But no, I mean, this will be a snapshot of your portfolio anyway.
Do you want to do small cap or growth?
We can start with growth, I think. Yeah, let's do growth. Yeah, keep it at this level. This is perfect. So they don't see all of the lower ones.
Great.
But yeah, I participated in Meta today, actually. That was a new trade I did just, I think, an hour ago.
That's a new position for you?
Just this morning. It's a trading position. So
okay, gotcha.
Before I get into that, I have such a fat cash position. It says 9%. It was 15% a week ago.
Oh,
2 weeks ago.
Can you show cash on that?
Yeah.
And then do me another favor. Click on total gains, because your total gains, as opposed to this is just today's gains, is pretty incredible. You have Palantir at plus 924% from your average. You have CrowdStrike at plus 100, almost 50%. Cloudflare, which is net, at 144%, Rocket Lab 325%, like Tesla at 130%. I don't know what A Lab is, 190%.
Astera, I love me Astera Labs.
Hover over IonQ, because you started talking about IonQ, and I wanted to ask you about this company. It's on the lower right.
Oh, I'm going like top down. No wonder why I'm not seeing it.
Yeah. 563%. Why IonQ? And talk about what this company does. First of all, maybe like you can help educate us, because I've looked into this company. I don't really understand. And
what do you? Before we get to that, what do you know about quantum in general?
Nothing, because
Nothing?
As a computer science guy, I don't understand quantum computing. Like my whole life I've prided myself in knowing things about software and computing in general. I don't understand quantum computing.
And keep in mind, we have like 20 minutes left of the podcast.
Oh, shoot.
Don't spend all 20 minutes explaining quantum computing.
I'm just going to say super quick, so I want to get into a lot of other names, but just like, if you're bullish on quantum computing, because that's the next derivative of AI, eventually we're going to have quantum actually hit the commercial space. It's hitting the governance sovereignty space right now. There's a national security component to it as well. Invest in the leader, category leader, and that is IonQ. Like, they are truly forming a kind of whole network effect of not just being hardware, because hardware is so freaking early. It's only, I think, a couple dozen qubits. You don't do anything with that. So like, I think right now the whole space is super, super, super early. But I think right now the market's not caring about anything on fundamentals or like where the profitability will be, what the qubit, where they are at the qubits. They're just caring about what's inevitable, who's the market leader, and who's going to get some government deals along the way. And I think you're going to see a lot more. Everything that's happening on the AI front eventually is going to happen on the quantum front, because spoiler alert, if we win in AI, but China was in quantum, who cares about us winning in AI? Quantum will surpass that. So I think that for me, my thesis always has been the scalability of the trapped IonQ, of what a trapped ion version of what IonQ is doing. And also now they're just doing the same Rock Lab thing. They're just acquiring all these assets to kind of being able to sell to the government, because that will hold them over until the hardware catches up. Because right now the hardware is so freaking early, but they are acquiring a lot of assets to kind of get that sovereignty deals along with it. So that's IonQ.
Couple of questions before we move on from IonQ, because to be clear, IonQ, like they don't have any quantum computers that you can buy right now that like
No,
actually solve any real problems. Okay, so basically it's like pre-revenue for the kind of tech that they represent.
well, it's very similar to like nuclear. Like you're seeing Oklo right now. Like Oklo is
But
going
nuclear is like proven
berserk.
tech, right? Like in a way, you can kind of Aqua doesn't have revenue; it's also pre-revenue. But nuclear tech is proven, meaning like people know you can build nuclear, power plants or whatever. We don't know for sure that we can build these quantum computers. And I saw an interview with the CEO of IonQ where he was talking about the number of qubits that they're going to be able to do by 2027 is going to put NVIDIA chips to shame. And that kind of like got me like, is he for real? Is he serious? Is that like
totally misquoted? I will say before I continue, like IonQ is a client for Futurum.
okay?
I've invested. You guys know that I've owned IonQ for 3 years.
Yeah, I've seen it in your portfolio.
Yeah, you
for a long
don't
time.
get my cost basis if I just got in a couple months ago. Like I
Right.
started Futurum in June. But to answer your question, like what Nicola was saying was totally totally out of context. Like if you listen to the whole interview, all he said was IonQ computers might beat Blackwell on computational power by 2027.
Okay.
Never
Okay.
said GPUs would become irrelevant. So I think that's something where there's a lot of quantum bears out there because clearly, like yourself, like this, the hardware is so early. It really is truly so early. It's untested. It's always like this on any tech revolution that it could be 3D printing. It could be a nothing burger, or it could be like the next AI theme after AI.
Gotcha.
And I think that it hit like that clip that they tailored that had Nicholas say that thing is so misleading, but also I get why people should be upset because that is, if he actually said what people said, it's like, all right, well, shoot, that's in 2 years. Like there's no world the hardware is gonna be up to the point where GPUs from NVIDIA will get displaced. It was misquoted.
So we don't have to worry about our cryptography getting sort of crushed by.
Well, I spoke to a CEO that Inflection they're about to go public on quantum computing, new quantum name going public, guys. They actually make money though. They make a decent amount of money. But yeah, he actually is somewhat worried, but he thinks that there's gonna be enough time where they're gonna the blockchain is gonna figure out how to get around that. Like it's not gonna be a big issue, but that could be the Black Swan event that actually gets a lot of entries for. Like I would love it. I would be so happy if the FUD gets generated where Bitcoin goes to 60K. So I'll pound the table. I will buy so much Bitcoin if it hits 60K. Like so much.
Okay.
I hope that happens. It's unreasonable. It's ridiculous. But if it happens, it's a blessing. Let's hope. I mean, if you're a long-term investor,
I don't think it's likely in the immediate future. I think it's likely in a year or two.
Yeah.
Okay, let's move on from IonQ because I know there was other names that you wanted to talk about. So feel free to jump in, and we don't have to show his portfolio anymore. Shay, feel free to. And by the way, Shay, like just a quick commentary on your portfolio. You're actually sharing the dollar value of your portfolio as well, which like I have mine hidden from people who are subscribers. That's pretty gutsy. Like I presume those are both real portfolios that you're following allowing your.
So it's a tricky thing because when I first started Savvy Trader, it was 2 years ago. I call this my Batman job. My Bruce Wayne job was corporate strategy at a Fortune 10 company. I didn't think I was going to be doing everything I'm doing, like going on TV, talk stocks, working on institutional at Futurum, or my Twitter account blowing up the way it did. I just didn't think any of that was going to happen. So now my whole ethos was like, I need to place events and talk about what I think is happening in the markets. My girlfriend at the time, wife now, was sick of me talking to her about it. And I was like, all right, well, maybe I'll go on Twitter. Maybe they'll listen to me more. And my whole journey
you
was
want to give that much credit to her for basically launching your. I'm just kidding.
Listen, I'm a new husband. I have to give her all the credit in the world.
That's right. I love it. That's perfect.
The whole thing was turning 100K to $1 million. I thought that AI was very real. And I think there were so many doubters in early 2023 on how AI was going to actually get monetized and how quickly. I was like, guys, like I'm worried about my freaking job. The more I look into AI, I'm like, this is replacing intelligence. Like you guys have no idea. This is a new character trait. It's not 3D printing. People in my circles in corporate world thought this could be 3D printing. Like they thought, oh, it's a fad. AI's been around. Like, why now? It's like, well, the ChatGPT moment wasn't before. Like, this is consumers are now going to be like taking this like crazy. And now consumers are usually the lever that pulls enterprises to force themselves out of the comfort circle. And that's exactly what happened. And I think now that AI just, I had a thesis. I went all in on that thesis. That's where I got Palantir. I knew from when I researched, they're going to turn messy data into operational insights. That's what the applications on AI era, that's what will be the biggest alpha. And that's what happened. After that, what's going to happen in AI? Data is about to explode, to a bazillion amount that there used to be in just the cloud era. So what do you have to do with that data? You have to secure it. So that's where I was like, CrowdStrike has the best endpoints, and no one in the cybersecurity realm can create their own organic modules at the pace that they can. Palo Alto, they have to acquire their way to get into identity. CrowdStrike, they can do it organically through Falcon. Like they don't have to spend up. So I was like, that's scalable. I love seeing that. And George, credible founder-led CEO. That's a really important thing for me. Sense of theme. We have Karp and Palantir. We have George in CrowdStrike. We have Peter on Rocket Lab. And who's been my lagger? Freaking Snowflake. And guess who's the CEO? It was some Sloopman fell asleep on the wheel. He actually, from the people I've talked to, he actually wasn't gung-ho about AI. He was part of the camp where he thought it was more fad. It wasn't really going to be any kind of real monetization vehicle near term. Clearly was wrong. And I think that kudos to this board of directors at Snowflake to kind of force his retirement. And they got an incredible CEO who was on the short list, by the way, to replace Sam Altman at OpenAI when Sam Altman had that weird sister thing that happened a couple years ago. He was on the short, like top 3 or 4 to replace him. He knows his AI. So I was like, all right, 40% of the Fortune 2000 data is stored in Snowflake's ecosystem. I know for a fact from the data scientists I work with that it takes 12 to 18 months to migrate your data system out of Snowflake into a competitor like, I don't know, Databricks or any of the hyperscaler competitors. Like it has to be such an enticing offering for you to go through that head of a migration. So a lot of times they won't do that. So I was like, all right, if they have the right captain to right the ship, I think that there is a world where they can turn into this like data warehouse company to an actual enterprise AI data platform. The issue though is they don't have the flexibility that Palantir does on the workforce. They need actual salesmen, traditional SaaS. Like Palantir makes billions of dollars with the hundreds of workforce, and it's an operating system versus more Snowflake's data platform. And also from people I talked in the space, Databricks is screwing Snowflake over big time. Like they are just, it's so much easier operating in the private markets than the public markets because nobody cares about margins. So now Databricks, knowing that if you store your data into our ecosystem, it takes over a year to migrate out of it. So we're going to essentially underprice Snowflake on almost every client deal. So you come with us and we'll take the loss, no margin, probably a negative margin, but eventually we'll make that up on upselling down the line. So Snowflake has a big Databricks problem that does not seem like it's going to go away anytime soon because Databricks won't go public till why should they? They keep getting an up round. They're valued at 90 billion. They're valued 25% more than Snowflake right now in the private markets with not similar margins at all. So I think that I digressed a bit. So I think that long term, I am just so bullish on AI. I'm bullish on space. I'm bullish on quantum. I'm bullish on a couple other themes like healthcare AI, Tempest AI I like as well. Like all these themes, the core thing is I believe in category leaders. Valuation is a component, but it is mainly a secondary factor in my investing decision initially because all I care about is moats. There's an AI tsunami that's coming for everyone. If you have an AI lifeboat, I know that high tide raises your boats in the long run. And I think that it's really vital to kind of make sure you are investing with an AI lifeboat. Because if you imagine if you're all in on the internet era, .com era, you're like, this is going to be incredible, but you didn't invest in the online marketplaces that were built on top of the structural arteries of the internet, like Google's, Amazon, but you invested, Cisco, I think Cisco looks great now, but like AT&T, Verizon, etc. Like those companies were like the easy no-brainers in 2000 because they were just building all these the internet wouldn't be possible without them. So people are like, oh,
Right.
well, I will invest in them then. But really, the hidden gems were the online marketplaces. So I think that's why I always look back on, I know Palantir has a monopoly in what they do. Valuation is, don't even get me, like, I sold my risk at $60. I thought it was expensive at 60. Now it's at 170. So like, I'm just not touching it. Cloudflare is another example. Like, they have a monopoly in what they do. CrowdStrike, in my opinion, is the tier 1 cyber name. I just think that it's really important to invest in category leaders, and eventually there's going to be a dead couple years. I really do think so, because you can't be 200 times sales. Like, it's just, maybe you can't. I don't know, but I also think that for Palantir, what's their? I'm looking at how much money they're making this year. It's really important. 4.2.
Yeah, run rate.
So 6
but they
months
might do
ago,
like 6 billion, right?
That's what I'm saying. 6 months ago, everyone on the street thought they were going to make $3.5 billion this year.
Right.
Now they're saying 4.2. That's a massive increase in just 6 months. Like what Hamid just said, it might be at 6 billion. So that's
6 billion. I was thinking the next 12 months, but yeah. I hear you, what you're saying.
Yeah, there's a crazy reacceleration. I think that shows that just nobody knows the ceiling on AI. So it's really important to invest in the best, because you got to capitalize on it. It's a once a generation theme. And I think that's why a lot of names look cheap in the software space, because nobody wants to live on SaaS Avenue anymore. They want to move out. SaaS is a bad term. And I think you're going to see a lot of opportunity costs wasted if you just try to catch a falling knife.
Very cool. Lots of good stuff there. So we're getting close to out of time, and I've been kind of dominating asking you questions. So I'm going to leave the last 1 or 2 questions to Dustin. Dustin, go for it.
Thank you for your generosity. I appreciate the 4 minutes. Okay, so Shay, we talked about how you started your Twitter account, or really focusing on it, roughly 2 years ago. In that time, you've grown your account to have almost 250,000 followers. What's resonating with your followers that are getting people to, follow?
That is pretty incredible growth, by the way. Congratulations.
Thank you. Initially, I always was like, all right, I want to be the Ryan Seacrest of FinTway. I'll be everywhere and doing everything all at once. But no, really, it was just transparency. Like what Hamid was saying, like, you show the dollar amounts like that. I don't do that. Like, it's rare for someone, especially with the account size I do, like, to do that. I think it's really important for me that there's so many gurus out there on FinTwit that have an Excel sheet that says how much they've actually made money on, what the performance is. There's a lot of fluff out there. So I think for this specifically, from the get-go, doesn't matter how I got way bigger than I thought I was, I wanted to maintain my original ethos that I'm going to be as transparent as possible. Come join me in this journey, and then you're just going to see where I get to. And I hit the 1 million mark. Like right now, you don't see my private investments on that StockSavvyShay, but I own Databricks and I have a couple other companies I own. So it pushed back to 1 million, and it's great to see because
between the two portfolios, I think they're worth roughly 1.5 million, right?
Totally. So like a lot of times, it is accurate. So that's why I was like,
okay,
I do want to say that, but originally when I started in January 2023, it was just growth. I started small caps in October. So I used to say I passed 1 million, but people are like, oh, well, you started a brand new portfolio. It's not the same thing. So now I'm just like, all right, fine. I'm not going to even go down that path. Like, we'll just treat the growth as the only one. But yes, so I think the transparency is what resonate with people. And I think that I've been okay to look like an idiot. Like, I have looked like an idiot. Like, the clip with me and Martin, like, I look like an idiot on IonQ. Like, there's moments where at 6 a.m. I'm streaming. Like, probably I'm not gonna look the brightest, but I have thick skin. I play college sports, and I think that my ability to be grounded while also trying to provide insights resonates. And I think that's something that causes maybe a little more polarizing than anticipated. But I think that's also why a lot of people are more recognizing my accounts. I think so. That's what's happening, is my guess.
And I think that's why there's been a lot of synergy between your portfolios and Savvy Trader, because we're all about, the whole reason of the product is to promote transparency. By the way, for everyone listening, everyone's links to their portfolios will be in the description below if you want to follow along.
Yeah,
I mean, you guys are killing it. Like, I saw yours is 260%, Hamid's is 500%. Like, I'm just like, all right, well, I guess we're just. I thought I was doing a great job. Apparently, I'm the norm.
No. You're definitely outlier, and I think my 500% is all time, which I've been on the platform longer than you have. But
Right.
but I did compare our portfolios against each other, and I barely edge you out, but only for now, because normally this is not normal for me to have this kind of performance, and I got to credit you with one of my largest picks, which is Rocket Lab. So who knows where my portfolio would have been without that.
Listen, you made the app, you guys made the app. I owe you guys so much because I love the app. I use it every single day. It's a great journal for me. So let's just call ourselves even on that.
I love it. Awesome. It's been a pleasure having you, but I kind of want to give the last word to Dustin again, because as he mentioned so kindly, I've only given him 30 seconds of our hour.
I was just being transparent in the theme of transparency. Thank you, Shay, for taking the time to be our first guest on the Buy.
Oh, I am. I didn't even know that. Wow.
Oh, yeah, I'm expecting you to add that to your bio, by the way.
Guest on Buy and Hold Rant.
Yeah. And we hope to have you back, in the future.
Yeah. Thanks for having me, guys. I had a lot of fun. Hope next time I come back, let's have more of a dialogue. I don't want to be the just have a little throw riffing at it. I want to hear your perspective more than hearing myself, because I hear myself talk way too much already.
No, I feel like this was good dialogue, right? We pushed back on some stuff and asked you questions about your way of thinking about things like quantum computing, and it's good stuff.
Yeah.
Awesome. For listeners or viewers, if you like the podcast, and if you like guests like Shay to be more frequent, let us know. Subscribe and rate the podcast as well. Even if you rate it poorly, like 1 star, whatever, like let us know.